Well, for the fifth time this year, the Federal Reserve expected to tackle inflation by raising interest rates once again. Denver area homebuyers are keeping a close watch, knowing that means mortgage rates could creep up again. Our real estate expert joins us once again with more. Lane Lyon is a realtor and managing broker at Coldwell Banker. Good morning.
Hey, Gary. Thanks for having me on.
Thanks for coming in. Seems like we've had this conversation
We
before.
have talked about this. Here we go again.
Here we go again. So what do you think the impact's going to be this time?
Well, we're going to get a better sense around noon today, but forecasters are anticipating that we will see yet another 0.75% rate hike to what's called the federal funds rate. What does that mean for the housing market? Well, here's three things you should know going into today's meeting. First of all, remember mortgage rates aren't directly tied to the Fed's actions, but they can be influenced. Loan officers I've been talking to this week say, yeah, we're going to see some slight changes to mortgage rates coming out of today's meeting. However, nothing too significant, nothing too drastic, because banks have been anticipating these hikes, Gary. Believe it or not, market reaction isn't so much that the Fed is actually meeting today, but what Chair Jerome Powell says after the meeting about future plans. That could have a little bit more of an impact, so we'll watch that. For now, though, Gary, mortgage rates for 30-year loans right at about 6%, a little bit over. Yes, that is the highest we've seen since 2008, but historically, we've seen much higher, and we're just riding the wave right now.
So buyers that are wanting to finance are having a little more trouble, but you say there are opportunities out there.
There are opportunities in today's market just because there's less competition compared to what we saw earlier this year. Remember all those bidding wars that we were dealing with. So in theory, your mortgage rate may be a little bit higher, but you're not paying as much for that same house right now, which is good news. Now, if you just don't like the interest rates or they're just a little frightening because of where we've been, remember there are a few things you can do. There are loan discount points you can talk to your lender about, rate buy-down programs with new builds. So go talk to the builders about that. And you can also ask sellers to fold in some concessions at closing to help you with that rate buy-down. Speaking of sellers, Gary, we are still seeing occasions where sellers are going on the market right now. They are getting contracts the first weekend, sometimes more than one offer. The key there is they're pricing their home correctly so that buyers will see the value in today's market.
Well, you have to do shopping these days.
You do.
You really do.
Yes.
Yeah. So I thought this was interesting. You say that experts are expecting a big surge of homes on the market. Why is that?
Well, we're really watching this closely because some of it is seasonal. We do tend to see a little bit more activity in the fall. But we also are hearing on the other side people that are saying, you know, I like my interest rate, so I might just hold on to this for a while. So if the rates start to change, if demand starts to go up because people are holding on to their houses, we may see prices go up, which creates another incentive for people to sell. Yeah, we're watching this closely, Gary. But in the meantime, remember, real estate has historically been a good investment, and I'm here to tell you that even now, that is the case.
My wife keeps reminding me of that because I passed on several
you go.
opportunities over the years.
Funny how it all works out in the end, right?
Right. Okay. Lane Lyon, always good to see you.
Hey, thank you, Gary.
Thank you.
Appreciate it.
Take care.